Hello friends. After staying cautious on the markets for 6 to 7 months starting September last year, we turned positive in April first week. One of the key elements why we turned positive was our expectations of revival in foreign investment. As you might know, over the last 3.5 to 4 years, net foreign investors were pretty much absent from the Indian markets. Over the last few months, we have seen some revival in FPI buying. In the month of June, in fact, there was a very solid institutional demand for Indian equities, almost $10.8 billion if you add foreign and domestic investors. However, Indian market underperformed emerging markets in the month of June. Why so? Because the supply of equity also jumped up to the extent of $10.2 billion in the month of June. This might remain a recurring theme and might cap secondary market returns. From a medium to long-term perspective, we continue to be very positive on Indian economy, corporate sector, and markets. Primarily because the macroeconomic fundamentals of India today on a relative basis are probably one of the best. However, to make this more sustainable, what we need now is a revival in consumption, primarily urban consumption, and also corporate capex. As you know, government as well as RBI are trying hard to induce this growth. Encouragingly, if you look at index of consumer sentiment, which we track, has been showing some signs of revival lately. From a fund perspective, we would recommend investors to consider for lump sum and short-term STPs mandates such as flexicap, multicap, larger mid and value. From a SIP perspective, small cap, mid cap and innovation themes look good. Remember, volatility is still going to be there. However, for long-term disciplined investors, volatility is a friend. Thank you for your attention.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.